Hello traders, welcome to option trading. Today we're going to discuss why most traders and even professional traders trade in options. I have three main reasons for this question and now let's discuss all of them. The first reason is that you can trade options in any market conditions. You can trade in a bullish market, you can trade in a bearish market and even in a sideway market, okay, right, which is also called as a neutral trend market. So this is why most people prefer options because they can trade in any sort of market condition. Okay. So now let's see why options tradings can be a risk-free trading. Hedging is an effective technique that reduces risk drastically. Option trading can be a risk-free trading when you trade with ideal option strategy techniques. So you have a lot of option strategies technique where the probability of winning can be higher with very less risk, and even there are some strategies with no risk. So that is why we used to say like option strategies can be a risk-free trading. So we buy and sell with the combination of calls and puts. So we call it as strategies. So a best strategy can drastically reduce the level of risk. I have an example here. So this chart shows, for example, if the market is at 16,709, right? The Nifty is at 16,709, and you have done an hedging here. Okay, you have done some this is a straddle strategy, right? Where I have just bought both calls and put the same strike price. Okay, so I'm just waiting for a movement here. Okay, either in upward direction or in a downward direction. Whichever direction the market goes, I'll get profit. Okay, either if the market moves towards upward direction, I'm going to get profit, and even if the market goes downwards, I'll be making some profit here. So if it sustains in the same place, I'll be getting some loss. But the loss is not going to be immediate, right? Like how you buy a naked buy and or a naked sell. So you'll get your loss immediately, but in strategies like this, straddle, strangle, and there are a lot of strategies. Just for an example, okay. So you will not be getting a loss immediately. So that is why people, most of the professionals, they used to go with these strategies. So if you are investing a huge amount, and the accuracy of your the success should be higher. Only then you can go for higher lots or invest much more in your trade. Okay, so this is one of the reason. So this is a directional trade, where you can you'll be getting a profit when the market moves in either direction. And there are also advanced strategies where even if the market sustains in the same place, you'll be getting profit. So then comes the sideway market. What you can do in a sideway market. So you think that the Nifty is going to sustain in the same place, or it is going to be in a side wave and nowhere it is going to move. So what you can do is that you can go for a writing of a straddle. Okay, writing means you're going to sell both a call and a put. Okay, so if the market sustains in the same range, for example, if it sustains between 16442 and approximately, I'm telling, okay, and it's around between 1700. Okay, so if market sustains in this range on the day of expiry, or you can also exit before that. You don't have to wait till the expiry. You're going to make some profit, and only if the market moves beyond this limit, you're going to make some loss. So anyway, we're going to watch the market, right? So this is just an example where you can go with hedging, and so that you can reduce the loss drastically. Okay, and looking into the advantages of options trading, cost efficient. So compared to stocks and all, the price of buying a call and put is comparatively less cost, but selling, that is writing calls and puts, are not going to be cheaper. You need a huge margin. You can reduce it by options like basket order. We'll discuss in another video about it. Option trading has limited risk. It's because we are using various strategies. So an efficient option strategy will definitely reduce the level of risk. then you can trade in any market condition, even in a bullish market, a bearish market, and even in a sideways market. You have high liquidity and volume where you can easily buy a call and put, right? You'll have a lot of buyers and a lot of sellers, but the thing is that you have to choose the appropriate strike price which has high liquidity and volume. Option trading has less brokerage and more leverage, but you can't say like you'll be given huge leverage, but it will be better. And that's it. Thank you for watching the video.